there's a lot of this political shenanigans going on. We have the LDP election coming up, and we might have a snap election going to year end. So to us, our call here is that BOJ will hibernate until the political dust settles towards year end. And we know that Fed has had pulled a surprise 50 basis points cut yesterday, right? And I think both Fed and BOJ, they are in normalization process towards neutral. We can argue neutral, the level of neutral being Fed might be something less than 3%. Japan might be somewhere around 1%. And the Fed is loosening because its policy rates is too tight, right? Vis-a-vis its dual mandate that's according to Chair Powell. And then BOJ, I think they will continue its own gradual plan towards neutral, maybe 0.75, maybe 1%, and we think that, sustained inflationary backdrop in Japan, given the wage growth, backdrop coming up in Japan, will help BOJ to gradually go towards that normalization path. Despite, we know that people saying that Fed cuts might delay the whole process for Japan, but we think that Japan will continue its own gradual path.
Mas, I wanted to ask you about the election and the impact on bond markets. Particularly, we're hearing about this potential front-runner in Sanae Takeichi. You've got some analysts saying that she could potentially become the first female prime minister, but also interesting her views in terms of monetary policy. Of course, she's seen as a protege of Abenomics. What does a potential Takeichi as prime minister, how does that adjust, I guess, the market expectations as it relates to the JGB market and also BOJ policy continuity, if at all?
I think, Takaichi-san, Takaichi is a very experienced politician, right? And she has voiced that she will continue Abenomics. So, that in terms of Abenomics, it will be uber dovish monetary policy, keep monetary policy at a very dovish stance for a very long time. Plus, she is very eager on spending, right, fiscal spending. And the immediate, I think, bond market reaction will have like a bullish bond market reaction that will keep bond yield at bay. Maybe it will steeper a bit, right? But then in the long run, if you think of like her stance, putting, spending more into a high pressured Japanese economy, that will actually be a very positive stance to market, I think, that will help the equity market. And in terms of bonds, it might be anchored for a while, but then mid to longer term, that will probably mean like a higher yield across the curve, just because of, the economic development and the growth she might bring to the Japanese market.